So again, I would want to welcome you to this your financial reporting class. We want to continue covering syllabus. Today, I want us to deal with the impairment of assets, asset impairment. Now, of course, we know the concept of depreciation, where we have got gradual loss in the value of an asset. But it is possible that an asset can suffer additional loss. And impairment is also largely associated with those assets which do not have what we call a finite useful life. Right, so let's get on into it. The objective of the standardized 36 is to ensure that assets are not carried at an amount above their recoverable value. So I hope that you can see this one. And of course, we're speaking to prudence as we're discussing that particular thought. Assets should not be overstated. Now, IAS 36 impairment of assets. Impairment is simply a fall in the value of an asset so that its recoverable amount is less than its carrying value. Impairment is a substantial loss in the value of an asset. It is also called revaluation decrease. Recoverable amount is the higher of the fair value, less cost to sell, and value in use. These key terms must be appreciated. Impairment losses should be written off against profits once established immediately. Of course, the standardized 36 does not apply to non-current investments held for sale because those fall under, IFRS 5. Right. Now, assessments of impairment should be made at the end of each reporting period, whether impairment has occurred or not, for us to ensure that some assets that we carry in the financial statements are not overstated. Now, how do we know that an asset has been, impaired? We have information from external sources as well as internal sources. So under external sources, we see that there will be fall in the market value of similar assets. There will be increased interest rates. I can put other things including the loss of a key customer. Okay, there can be a change in law, and all those things may result in the substantial fall in the value of an asset. Internal indicators. Okay, now under internal indicators, we've got those factors that are under the control of the organization. So first one is obsolescence. The asset is simply outdated. Adverse change in the use of the asset. This could result from damage, and so on and so forth. All right, so that is what you have there. I think the key thought under this particular standard is the issue of measurement of impaired assets. Okay, so assets that are impaired should be measured at the higher of, fair value less cost to sell, as well as value in use. Now, fair value is the market value or best estimate of particular asset. Cost to sell include transaction costs such as legal costs. Cost to sell cannot include restructuring or reorganization. Of course, that falls under, provision, standards. Right. Now, value in use means present value of estimated future cash flows that may arise in relation to an asset. Okay, so again, our assets which are impaired should be measured at the lower of, so measure assets at the lower of, so I'm going to give you this one, at the lower of the CV of the recoverable amount. So we have discussed point their recoverable amount. Alright, so let me get on to something that is equally important, that is the issue of cash generating units. And I think that's where we're starting in terms of questions. A cash generating unit is simply the smallest group of assets capable of generating independent cash flows. Examples here include production plant, subsidiary. You may have what we call a chain of stores. All right, let's progress. The allocation of impairment loss in a CGU is to be dealt with in the following manner. First of all, if the CGU contains goodwill, goodwill must go first. Then you follow that up with damaged or written down assets. And then any remaining impairment loss must be allocated on a pro rata basis based on the carrying amounts of the asset remaining. Okay, recognition. Impairment losses again must be charged to the profit or loss. Of course, the asset value must also reduce. For revalued assets, impairment losses should be charged against revaluation surplus to the extent of the remaining revaluation surplus on the revaluation surplus account. Any excess impairment loss should be taken to the profit or loss. Okay, now after impairment loss has been done, depreciation charge is to be based on the new value of the asset since there was revaluation, and then reversals of impairment losses should be recognized immediately in the profit or loss. Disclosure requirements. Of course, you can always read this at your own time. You have to disclose which assets would have undergone impairment during the time, what could have caused that. All those issues can be discussed. All right, so again, that was a brief. I'd like now to turn to some questions and see if we can attempt those. So I'm using the BPP, questions. Let me go to question 38. And, it's a good idea to always start with the requirements. It says, what will be the carrying amount of the building after the impairment exercise has been conducted? So we have got the cash generating unit there, as I said earlier on. I'm going to work in Excel, and I hope that you can follow through as well. Okay, so those who are writing, start writing, and those who are typing, please start typing. I think it's better to use a different gadget so that you can be doing these works as well. Okay, so I want to deal with some kind of a table. All right, if you may allow me just to do that. Some people are crazy about these tables. So in this table, I have the following words before, then I say loss, and I'll say after. Okay, and then I'll put in the components of the CGU, which includes building. Because of time, I'll be writing some of those things in acronyms. So plant and equipment, then we've got goodwill itself, GW, and then we have got current assets. Now, for your own information, current assets are not to be depreciated unless, are not to be impaired rather, unless it is said so. Okay, so there we go. Now I'm going to put dollar signs there so that we can already see what is going on. Okay, push in your figures. What do we have? Building 700. What do I have next? 200 for the other amount. Then please make reference to the revision kits. Again, I think by this time I should have shared the revision kits. If you don't have the revision kit, you can still get back to me on that, on that line that you saw. Okay, so let us sum up and see what we can do with that. Again, these are basic Excel skills that are being used here. I thought I saw thousands there. If you allow me just to correct that. well, with thousands of dollars on top here, of course. So what do I do there? Do like that, then I say that. All right, so that's what we have. Let us try to see if we can check for some other information down there. We're told one of the machines carried at 40 is damaged and will have to be scrapped. The recoverable amount of the cash generating unit is now standing at 750. Let me just go push that one there. Put 750 here. So the total impairment loss is to be, yes, I'm going to do this. Say equal sign here, subtract the bigger number from the smaller number. Let me just do this again. Say equal sign, say this figure minus that figure. I'm getting a 260, so come rain or sunshine, we're supposed to have that. Okay, so now let's begin. The rule is as follows: goodwill goes first, so goodwill must go in full. Okay, I wish I could just then there's no impairment for current assets, so I expect to find that there. And then we are told here there's an issue already. Equipment or machine with, you can see 40,000 there, is to be impaired in full. So then what is the residual impairment loss out of all this? I need to do some bit of working here. So you say residual loss is equal to the figure that we found, 260 minus the goodwill amount minus the 40. Okay, how much are we getting? So if we can use the power of Excel, I think we should be okay. I think you can see something there, 130. So that 130 is to be spread between buildings. So buildings will get, remember building is 700 divided by, so what are we remaining with? Excuse me. We have, please let's just try to take note here, the sum of values that we still remaining with. We have got this figure here for buildings, and here we have got a 200 from which we have already removed a 40, so we are remaining with 160 there. So the total of 700 and 160 is 860. So I'm dividing this, my division here will be 860, and then I multiply whatever I get by a 130. Let me just do that, my residual, impairment loss. I'll do the same for plant and equipment. Let's check that one out as well. What do you have? You've got I remember a 160 divided by 860, then we multiply whatsoever we find by 130. Okay, so again, use the power of Excel and of course check if your total comes to 130. So equal sign, I've got my figures, see 700 divided by 860, then I multiply that by 130. I've got that figure there, and then I do the same for the other one. Equal sign, 160 divided by 860. I multiply that by 130. That's what we have there. So if I can just round off all these amounts, I think that I'll be a bit safe. Okay, so that's what we have there. Okay, if you check yourself, you will discover that you are running with a 130 there. So I hope that you can see that. All right, so the target asset is of course the buildings. So building is to be allocated with 106 impairment, and the remaining impairment on plant and equipment is a 24. So let me just do some bit of work there so that we can progress. Okay, so there we go. Now for this one, 24 plus 40, please let us remember it's supposed to be 60, a 64, right? Minus. Okay, so let us do the necessary I think that's what I have there, and that is my answer on the other side, and that's what I have there. So if I try to check my totals should be tying in this particular, equation. So thank you very much. We were targeting buildings. So if we check our options, I think you should be able to see that the figure that we now have for buildings is 594. 594. After the impairment test, the carrying value of buildings will be 594. So thanks a lot for listening. I'd like to progress, and I don't want to be too long. I want to go to the next question. Of course, the students saying when the tutors do these things, they look a little bit simple, of course, because we've been doing these things for some time now. 39 says, complete the statement using the options provided. The recoverable amount of an asset is the higher of. So the higher of which one? The higher of, and of course this is coming from your notes. The higher of, I can get this one. Fair value less cost to disposal. I put that one. So this one is not complete. And then value in use. All right. So you have to, drag and drop. So we're going to drag and drop. Please, I can't do that in PDF. We're going to drag and drop fair value less cost of disposal there, and then value in use, we drag it the other side. Okay, so let's progress to the next question. 40 says Richard owns a machine that has the carrying amount of that much. The end of X9, 31st March. Its market value 78 and cost of disposal is estimated to be about 75. A new machine would cost 150 replacement costs. You ignore that figure. Richard Limited expects to produce net cash flows 30,000 per annum for the next 3 years. The cost of capital of Richard is 8%. What is the impairment loss on the machine to be recognized in the financial statements? Again, it's a nice question where you have to make comparisons of your, this is question 3 now, or question 30 something. Next question, let me just check that one. It's supposed to be 40 years. Okay, so in our question we need to look out for the CV, we need to look out for the fair value less costs. Please remember that you have to make comparisons. Then you have to look out for the value in use, and I think this is where we have got some weeks to do. Okay, so let's look at the question carefully. The carrying amount is given, it's 85,000, and then do we have another figure? Fair value less cost to sales given, 78 minus 25. If I may write that one, that will help us a lot. So that gives us, in essence, that gives us how much? 78,000 minus 25. Okay, there's a problem. You can't put in that. Okay, all right. Just corrected that. So we have got 75,500. Next, now we have to deal with the value in use, and I have to deal with my, PVs. So I have got I've got cash flow. Then I also have the discount factor, 8%. That's what I remember. Then we've got the PV, present value. So years again, 1, 2, 3. Then we are told that we're expecting cash inflows of 30,000 per annum. So you can always do that work. Students can always do that. Okay, so for the discount factor, please, the discount factor percentage should be known. And in this case, I think I'll have a little bit of some challenge for the other years, but I hope I can survive. So let's try to do some bit of work here. It says 1 divided by 1.08. Okay, this one, there's no need for us to put powers. Let me just try to see if I can simplify it here. That's what I have there. Okay, again there, equal sign, 1 divided by 1.08. Again, I multiply that by 1.08. I think that's the only way I can survive, I hope that. So it's saying there's a problem there. It's supposed to be, okay, let me just close this. Close. Okay, there we go. Say divide by. That's what I have there. Okay, then again, finally, so we say 1 divided by this time around 3 times that figure. Okay, let me multiply these ones in the same brackets. Again, I do the same. 1.08, close the brackets. Supposed to put an equal sign so that we can get the figure that we're looking for. Alright, so that's what I have there. So now the next thing that I need to do is to sum up, to have products initially. This times, okay, let me just do this. It's supposed to be this figure multiplied by that figure. So that's what I have there. I need to just duplicate, and then I sum up to check what is happening there. So I've got that figure there, which is higher, of course. Is it higher? 77,313 is higher than 75,500. So that's a recoverable amount. So then my impairment loss will be equal to my CV, which in this case is 85,000 if I'm not mistaken, minus 77,313. Let me just check that one. Yeah, that's correct. So let us check that one. How much is that if we use the power of Excel? Alright, says that's what we have there. Okay, so if I check my work, right, if I was to check my work, I would want to put that figure there, the 70, let's check again, 7687. Right, thank you very much for that. Let's go to other questions. 41 says IS-36 impairment of assets suggests how indicators of impairment might be recognized. Which two of the following would be external indicators that one or more entities' assets are impaired? Some unusually significant fall in the market value. Yes, external evidence of obsolescence of one or more assets. I think this one is normally taken to be internal. Then we have got, so all you need to do there is to tick a decline in the economic performance of one or more assets. Okay, then that one is supposed to be internal, and then an increase in market interest rates, that's external. So we take the first and the last options as our answers. I'd like you to attempt question 42 at your own time, and you're attempting question 43. Maybe I can close it up with last question 44. We told what amount, again, it's a good idea to go to the to the requirement, and then afterwards you can always do other things. Okay, really company acquired non-current assets 10 years ago, cost of 100, which had a useful life of 10 years, new residual value. The asset had been correctly depreciated up to 30th September 20x4. At the date the asset was damaged, an impairment review was performed. On 31st September X4, the fair value of the asset standing at 30,000. The expected future cash flows, of the asset is 8.5 per annum for the next 5 years, and we have been given the cumulative discount factor there which will make our lives a bit easy. Okay, so let us begin. I think the major work here is to establish the CV. That is all. The major work there is to establish the CV. So the CV in this case will be, you remember there was 100,000. So CV in this case will be equal to, let me just do that, 100,000 less, 100,000 itself divided by 5 years. We multiply that by 5, and I think automatically we should be running with a 50,000. Automatically we should be running with a 50,000. So if I may just have that figure there, 500 by 50,000. And then the next thing that you need to do is to deal with the fair value less costs. How much is the figure? If I look at my question there, I'm discovering that that is going to be 30,000. Okay, it's been given, so there's no need for us to worry. And then finally we have got value in use, which will be equal to, open brackets, you have got figure there. I've got 85, so just a moment there, 85, multiply that by it's not supposed to be 85,000, it's supposed to be 85. Multiply that by the cumulative discount factor, which is 3.7. Okay, 3.79. I think if I use the power of Excel again, and this is our last question, we should be having 85 multiplied by 3.79. That gives me that. So now the recoverable amount will be the higher of these two, which is 32,215. So then the impairment loss will be, impairment loss, I may just write it, 50,000 minus 32,215. And if I use the power of Excel, I have 50,000 minus 32,215. I'm getting that figure there. Okay, so if we check in our options, we are having 17,785. So thank you very much for listening in. I hope that you got one or two things. I'd like to end there for now, and I hope to see you on the other side. Please, if there be any questions, let us revert so that we can help one another.